There's a financial system and there's a financial market, right? So financial system is that system that runs basically on credit. Anything, if you tell you what's the financial system, banks is set up to basically run on credit. How do I need $1 million and I don't have to have $1 million, right? You know, the entire conversation around trade from the beginning has always been about what's the word? Has always been about how to leverage, right? And from trade by barter, how to get what you don't have by simply going to the market, or by simply exchanging with what someone else has. How do I use my cowries to buy goods? That has always been the conversation. So my system was really robust from the 1920s, where people actually could raise credit. So you go to a bank, you want to develop a business, a bank would give you money to do that thing with an interest, right? So interest is what really moves the financial system and can be gotten on credit. So everything runs on credit. The essence of banking is basically credit. So bank takes your funds, you put it in their vaults, right? And they use that funds to borrow other people money, or they go and trade with the money. Then the interest on it is what they use to run the bank. So anytime you need your money, they'll give you your money, right? So that's the whole essence. That's one. The financial market now, because there was already a financial system that runs on credit, they now decided to have a financial market where that credit can be sold and bought at a price, right? So this is now the market where you can now buy credit, buy this same credit, and sell this same credit, right? And that is the whole idea. So how do I mean? The first part of financial market that was established was the stock market, right? Where a guy is having a business and feels, how do I raise more funds? Goes to the SEC, that's Security and Exchange Commission, and files his company out to that he wants to go public. He wants to sell his shares, right? Sell ownership of his company, and SEC the SEC would verify the company that the company is legit, and it will host his initial public offering, and people will now subscribe to his shares, right, at a price. So you can now say, to own a part of my company, imagine maybe a company is worth maybe like 100,000. Now says to own the part of my company, you have to buy it for so amount, maybe five naira per share, right? And he now gives you people a very small portion of his company. If the company is, let's say, 100%, now gives maybe 3%, 4%, and sells this 4% to the entire public. So people now start buying. So now, because of demand and supply, we now see that 5 naira per share can now become, because if, for example, now let's assume he's selling 100,000 units of shares now, and we have over 1 million people that wants to buy that shares. You know that automatically this 5 naira now becomes, you start increasing because people are demanding for it. So people that initially bought the 5 naira would not want to sell it again at 5 naira, because they know that people want it. So they will not start selling at 6 naira, 7 naira, 8 naira, based on the demand that people are trying to buy the shares, because they tell them that the company is going to be big, or the company has one idea, one product that is very good. That is how that price of that share will not keep rising, right? You can see the concept is, he basically, why the same person that owns the company maybe is keeping up 50% of the company, of the shares. He's not selling it, he's only selling the remaining 50. And so he has 50%. But because the share value of his company is rising from maybe 5 naira to like 15 naira, automatically his wealth now automatically has quadrupled. And that is why people like Elon Musk, you can see how fast they've grown. Elon Musk will be eating 1 trillion soon. Elon Musk will be eating 1 trillion soon. And do you know that Elon Musk, right? Elon Musk is almost a trillion. Do you know that as at 2021, Elon Musk was around, very good, I'm going to see it now. See, Elon Musk was around, Elon Musk was less than 300 billion as at around 2020. What am I saying? Elon Musk was around $27 billion in wealth as of 2020. 2020 is 6 years ago. We all remember 2020. 2020 was pandemic. And from someone that was 27 billion at the beginning of 2020, it's over 800 billion in 2026. Do you know what that means? That's over 1,000%. You get, and he's a billionaire. Imagine someone, we say, I know we can't triple billions. This one has done over 1,000% of in billions, right? And why is it so? I will show you. I will show you why. So this is why. So this is Tesla, right? It's Tesla stock. See Tesla stock from 2020 around 260. That's gone to as far as over 500. Very good. See Tesla stock at the beginning of 2020. See, Tesla stock was around what? 28, 22 to like $29. See what it is now. Almost over 400, around 400, 500. I even put that 500 at some point. So imagine the person that owns over how many percent, 45% of that stock. So you can imagine how it was. It was 27 here. By the time it got here, it will definitely be over 800. And that's how you keep going. You'll probably hit $1 trillion before 2027. Right? So what am I trying to say? Is that you can see how this looks like a Ponzi scheme, kind of, right? This is, he has done nothing here, but people are basically buying into a perception that this company will be bigger, and they will keep buying, right? So what is he just doing? He just sold this company just took the company to the public, and people are actually subscribing to the shares, right? So that is how the market has always been, right? So that is basically what I was saying when I said that you need to understand how the market works, right? So now, what happens in the future? Let's assume Tesla stocks, bam, collapses, right? What happens? Everybody that has bought at very high prices, suddenly you have zero. Nothing. There's nothing you are going to be doing. Your money has gone. Nothing. If Tesla makes a very big error now, and all their SpaceX suddenly starts dropping from the sky, or their satellites start dropping from the sky, nothing will happen to Elon Musk. Could go scot-free. Nothing will happen to Elon Musk. But everybody that has invested, particularly people that have invested from here, from this price, from this range, from this price, your money is gone. Nothing will happen. But the only people that might get money out of this Tesla business are the people that Tesla has in collected maybe loans, credits. These are the people that they will sell some assets of Tesla and pay back. But if you are a shareholder, like you bought shares of this company collapses, that is all. Your shares goes to zero. And so many people have bought shares in Nigeria stocks like that, and everything went to zero, right? So you can see the dynamics of the market. Like you can't go and there's a time even MTN, for example, in Nigeria, was made so much losses that they basically had to they basically declared their share value went to as zero. Nobody was paid any dividend. Everything went to zero, right? So that is the idea around the way stock market started, and that's the concept. Now too many changes now happen to the market. So many things was not happening. You get so many advancements, so many technology now came in till we got to Forex. Now, Forex is part of the derivatives. The derivatives where you can basically just you are not trading the actual market. You are just basically just making money off the actual market. So it's like saying you're not playing the football, right? But you are actually making predictions based on the football, and that is basically what Forex is. So Forex itself is not the real thing. The real thing is what is being done in the banks, right? The Forex itself is the offshoot, right? So the data will happen whether we trade it or not. You know, when we started trading those years, they'll tell you that if somebody puts $1 billion to trade now to move the market, but then people it's a wrong knowledge, because the only people that can move the market are the actual players in the market. Right? It's the actual players. It gets actual players in the market, and those ones are the ones that will, hold on, guys. They're the ones that will actually move the market, right? So if we are not the guys that are moving the market, right, how then should you approach the market? Because it is key, right, to note that forex, crypto, options. Let me just dive into crypto a bit, and that is why I don't do crypto, right? Now, see what's happening with Bitcoin. See what's happening with Bitcoin. See Bitcoin in the last 1 year. See, got a peak here and see where it is here. Okay, so but before then, let me quickly show you something. Um, top owners of Bitcoin globally. So now see the top owners. So apart from the fake owner we don't know that has over 1 million BTC, BlackRock has over almost a million. MicroStrategy has over almost a million. Binance has almost half a million. Coinbase have almost a million. US government has over 300,000. China has over 194,000. Incubus has over 70,000. Then question is, how many Bitcoin are there? Mine blocks new Bitcoin per day about 900. And 5 of Bitcoin has been issued. There about 21 million. And see people that are already owning over how many, right? These people by the time you combine the numbers, they own more than half of the entire Bitcoin in supply, right? So, and because it is a limited asset, right? It means that people can actually own it and determine what prices it would be. That is not the market. That is not a fair market anymore. A market where you have very small suppliers, and so many buyers is a problem. They're going to run like a cartel, and they're going to mess up the prices. So that's why I don't do it, because you cannot technically or fundamentally understand where the market is going. This particular drive, right, is basically this particular drive has no fundamentals guiding it, because gold is gold is going the other way. They said Bitcoin is going to be a safe haven asset, and yeah, people, whenever the economy is bad, people run into it. That's what we also preached, right? But then this is the most risky part of the global economy in the last 1 year. See this chart. See this chart. See the downturn. Look at gold. That is also a safe haven asset, right? Look at gold. That is also a safe haven asset, right? See what gold is doing. You have to see a chart directly on board on why is. I'm even surprised the internet is doing this well. Okay, but of course we all know what prices of gold has been doing. That's gone to almost 5K, as in from 2025. It has done. I was predicting it was going to be on 3,000. It has gone 3,000, 4,000, 5,000. But it's heading towards 6,000, right? Because it is a safe haven asset. So it means that whatever story we have been told about Bitcoin is not a safe haven asset anymore, because then people can actually own it because it is limited in supply. People can own it and manage whatever the prices would be. And that is a very, very messed up content that I pity people that they say they want to trade, they want to own it, because it doesn't follow those principles, right? Now, we're going back to Forex, which is what I was talking about earlier, that the fact that it is not the main game, right, means that you are not you are inconsequential in the decision making. So the only thing you are meant to do is play within the confines, right? So the topic of my conversation is, where does the money go? Who makes the money, and who loses the money, right? Now, so whenever, okay, so for example, now this is simple. If Bitcoin is bidding like this, right? It means that people are selling massively, and people that are selling massively, and people that are losing right now, people that bought it at the prices higher than where it is right now, right? That means that people have bought a chunk of it at lower price, and they are happy that the prices are going. In fact, they are deliberately making sure the prices are going down so that they can mop it up when they get there. So Bitcoin will still definitely rise, but by the time it rises again to where it was earlier, you realize that people that own it now are becoming limited by the day. Less retail people are owning it, more institutional investors are now owning it, and that is basically what they've been doing all along. That was the whole plan all along. So for me, I don't play in that space because it is not something I can. It's too it's too unpredictable for me to play in, right? But some people are comfortable with it. I don't know, but then so now back to Forex, right? I will explain the structure of Forex, how we got to where we are now, and why some things happen, and you're wondering, okay. For example, one of the brokers, was it Exness? Exness had to shut down people trading gold last week because it was going in a linear direction. In fact, it was going too linear. This is probably the first time you see gold do that kind of linear. And let me say 10 year. Let me show you guys a 10-year. Yeah, see. So this is gold in last. Let me do 25 years. No. Okay. So I can't do 10. So 10 years ago is 2017. See, this is how gold has been. It rises, but this is how it rises. See how simple it rises, right? So this is the first time since 2024 that gold did this. So if you're a trader normally and something is going like this, easier now. You just place a buy now and just keep going because it's too linear. You know, we say it is hard for market to be linear. No, this is the most linear you can ever get of any instrument anywhere in the world. And I was arguing with someone. There was a particular guy that's a top trader. He was arguing in January that gold will probably come back to 4,000 before it goes. I said, what is driving gold is fundamental. Two major factors. Donald Trump is adding too much risk to the global economy, and people are running to quickly go and save their money in gold. Number one. Number two is that there's a level of the based on how we've traveled from pandemic to Russian Ukraine crisis up until now. Governments are beginning to increase taxes in quotes on their citizens. So whenever there's a lot of taxes in the economy, people stop holding cash in their banks or anything. They'll probably convert that money to add gold, physical gold, and keep it in vaults. And that's basically what, if you have a lot of funds, do the same thing, right? And that's basically what I'm also doing too, right? Because then it's easier. Nobody's going to tax your physical property. It's not possible, right? So now, because it is going linear, right? The broker had to shut down trading because this is too direct. It's too easy. Anybody that doesn't have any idea of trading can do this, right? So now I'm linking that conversation to something when I get there. So now someone just woke up and said, why can't we have a derivative market whereby the actual market where people buy and sell these things? Why can't we have a part of it whereby I don't necessarily have to own it, but I can actually also trade those things? And that is where the Forex market came into being, right? So people can buy ETFs, you can buy. So what we are doing is CFDs. CFDs are known as contracts for difference. So contract for difference are just basically derivatives that you don't have to own the asset, but you are basically speculating the price movement of that asset, right? Now, for you to be able to do that, you need two things. You need data from actual sources of that market, and that is where the banks come in. So the banks are actually the ones that provide the data, right, that we trade. So all those Euro USD charts. Yes, it's banks that so in this our space we call them liquidity providers. Actually, they were meant to actually provide actual liquidity. Liquidity means that you're providing cash, because in the real forex space, right? This is the bank. This is the bank that actually pay people when they make money, or when they or settle payments. So if I'm transacting with someone in China or in Hungary, right? This is the bank in charge of settling our forex transaction. So maybe I made money, I lose money. This bank that will settle all the banks, right? So banks, commercial banks that actually now are day-to-day traders in this space are called liquidity providers, because they are the ones that provide the data that you need, right? That the brokers need to give you as a trader to basically make money in the market, right? So now, a minute, guys. So now, hope you're following my thought process, guys. Hope it's not confusing. Am I the only one?
Good to go, sir.
Okay, so now you guys would give the data to the broker. So the brokers came in quite recently, maybe like 1989, 1990. That's when they came in. Before then, it was directly from. So if I, for example, now even till now, if I have $5 million, I don't need to go through a broker. I don't need the broker. I can go directly to the banks, JP Morgan and Co, and trade. Because I don't need leverage trade. The reason why I use a broker is for leverage trading, when you don't have as much to go directly to the market. And that is what all of us are doing. All of us here are doing leverage trading, because where do you want to have 5 million to trade, or $10 million to trade? You get, so everybody's using. So that is why you need a broker. A broker gives you the leverage to actually trade that market, right? So now, what is the structure like? And this is what I'm sure everybody wants to hear, right? Who makes money? Why we lose money? There are two things. There are two ways. That word that I'm losing money to the market is true, but not entirely true. Because when you lose money, is this business that we do, is what we call a zero-sum game. A zero-sum game is a game whereby someone's losses is someone's gain, right? Of course, the other person at the other end might not deliberately play a part in you losing, but that is basically how it works. And that's why I use the example of a casino. If a very good gambler goes into a casino, right, and makes money, the casino will pay, right? And when people lose money, casino also declare profits, right? That is the way it is. That is the way it is with every financial market conversation. Right? So now, broker gives you leverage, and broker started give you data, right, from the banks, and you start placing your trade, right, and you start making money. So this is basically what happened. Historically, it has proven that in financial markets, more than 95% of people fail. They form the crowd. They form the crowd of people that fail in the financial markets. And that's the same thing too with investing. Go and check. People that invest in stocks, and most people who invest in wrong stocks. Most people, it is what drives the liquidity, right? Most people invest most people invest, right, and they fail, right? And it's not far-fetched. It's just a law of life. And tell people a lot that it's just a law of life. See, so approximately what 90 to 99% of people fail to achieve constant profits in market. It's just a law of life, right? A lot of people fail, and it's just. I was talking to someone. I said, how many people now we are older? How many people do we know from our primary school that, in quotes, are doing well? Not necessarily Dangote, not necessarily at the lower level, but are doing well in life. The percentage will always reduce as you grow. In fact, it's now maybe less than 0.05. But in fact, as it stands, only 1% of the entire global community is a millionaire in dollars, less than 1%. So normally people then tend to fail more at endeavors than succeed at the endeavors, right? And that is why we have less, and that is basically why we have this kind of operation in the market where players have now come to understand these dynamics and basically what they do. And that is one of the things why I also don't like trading prop, right? Now, let's go back to what brokers will do. So now we now have brokers that haven't understood the market, right? They offer leverage, they offer all those things. They now figure that, okay, of course, because they in quotes work for the liquidity providers, they obviously now have, let's do it this way. Let me do a chart. Because they work for the liquidity providers, they obviously now have, they basically now make commissions from each of the trade, and that is basically what it is. If you go to the stock market, brokers will always make commissions. Anything that is called broker means that you are a commission guy. Right? That means that the more people you bring to the market, the more money you make, right? So now after a while, with these dynamics, a lot of people were just failing. Brokers now decided, why am I working basically for liquidity provider? Why am I just giving liquidity provider, anybody that trades, am I just throwing money to them and just collecting commission when these people actually are losing this money consistently? So what did the brokers do instead? They now created a delayed book, right? Because normally, whenever people make money from here, if you make money or lose money from you, when you fund with the brokers, give the broker the money. Yeah, when you fund with them, right? When you fund and start trading, they don't settle payments to liquidity providers fast. So it is not like they just settle. They just if you trade as you place buy and the trade goes, it goes straight to the no. They just, it is after a period, a 90-day period. Yeah, sometimes. So for those guys that trade a lot, right, you notice that your spread, your swap on Wednesday to Thursday is always higher, right? That's because the number of working days required, minimum number of working days required is 2 working days. So by the time you place a trade from Wednesday to Thursday now, the next working day on Thursday, 2 working days on Thursday is Monday. That's Thursday, Friday. Then there's no Saturday and Sunday is weekend. So Monday is the next settlement day. Right? So brokers will charge extra for keeping warehousing that funds till that Monday. So that is why you always notice that your swap on Wednesday to Thursday is higher than others, right? So those are the set rules. So after a while, they decided, why am I taking this money to these guys? Why can't I just warehouse, keep the money, and get settle these traders myself, since we are making so much money from them losing money, right? You get, because then it was the banks that were taking the entire funds, because the bank actually set up the entire system. It was the bank that set up all these things. It's basically banks, and it was just to have extra cash, right? Extra money by the side. That if there are people that are also playing in the space without having to trade daily that we do, we can also make money. And that's basically how this started, right? So that was how the whole idea of creating 2 books started: a book A or a book B, or a dealing desk or a straight to market, right? So brokers now started that dealing desk. So dealing desk now became a big deal, right? So it now became a big deal for brokers that are very big. They have a lot of funds. They're not looking like, when I can settle these guys myself, right? Let me just get data from the banks. I'll pay them for giving me data. I'll pay them annual fee for giving me data, and I'll settle these guys by myself, right? But then if I can't settle them by myself, I have liquidity, but I can go and borrow from them. So it now became, they now turn liquidity providers to actual banks that I'm borrowing from to settle my traders, rather than it now becoming the banks running the markets. So that's why we now have so many brokers now, and that's basically what they now all do. So, but this is the issue. So for every time you place a trade, remember I said it's a zero-sum game. That means that for every time you make a trade, there must be a counter trade because it is called what you call arbitrage. I see a lot of people talk about arbitrage now, and I laugh because the word arbitrage is simply a form of trading whereby two things are happening at the same time, and that's basically how it is with trading. Generally, if you go to a bureau de change guy and you go to buy dollars, right? Remember that two things are happening at the same time. You are buying dollars and you're also selling naira, and that is the concept. So arbitrage happens basically here also. So as soon as arbitrage happens, what it means is that when you place a sell right now on Euro USD, it means that that means your broker is automatically taking the risk of buy. That means they're also taking the opposite position. So if you place 100 lot size of Euro USD buy and you're in profits, your broker is suffering the loss. Right? And that is basically how it is. It is not meant to be, it's not a war against you, but it is a war. That's why we named this our group Warriors, because it is a war. Because then what it means is that for every time you are committing a certain fund, so some other person is also taking the brunt. Right? And that is what it is with space that we function, right? That every amount that you commit into the market is an amount that is actually going to be a loss to someone or a win to someone. And that is why I tell you like that. I don't like prop firms, because prop firms were initially set up. I'm going to explain it. This is the only time we would have this kind of conversation where I will explain what's happening in the market. So prop firms. I'm coming back to my thoughts, but then let me just give you guys the knowledge. What are prop firms called, right? They are called proprietary trading. Proprietary trading is a term in finance, right? Where if maybe a fund manager, investment firm, right, figures out, okay, we have a lot of firm, we have funds to give, because there are so many hedge funds all over the world right now, and they figured out that you cannot, how do I say it? It is very expensive, right? If I don't know if you guys watch a lot of series here, you guys should take time to watch a series called Industry. You understand how it works better. It's a British series. Industry talks about brokers, right? Banks, brokers, and all. Like it's something that you get clearer picture of how the market works. Now, so hedge funds, they have a lot of funds, and they have customers, institutional customers, very wealthy guys that just gives them this money and tell them to help them manage the funds, right? So these guys, because it's quite expensive for them to have in-house traders. If you have in-house traders in any investment firm, those guys are balling. They have limits up to 3, 4, 5% of profit made, and these guys sometimes trade up to billions of dollars. Imagine you trading billions, trading 10, 15, 20 billion in your fund, and making 2% of that. It's crazy. So this is go and for personal traders, very good traders, you just if you have a $2 billion fund, break it down into like $100,000 or $1 billion and demonstrate it, right? And give them the amount for you can have 1% trade and make money. We do less. They will less on commissions to in-house traders and make more. Right? That was the whole idea. Right? And that was as only if you check, there is called Ethan. It's called it. It's one of the baddest. If you go and Google like one of the baddest trader in the UK, this was one of the earliest people. She's around 40 or thereabout. Let me check. She's around 40, 43, 44 now. She has been trading hedge fund guys for over 20 years, like trading funds for them. And these are the people that actually started what we call prop firm. These are the people that were prop firm traders. So now, fast forward to 2020, 2021 or 2017, 2018. Some guys just woke up and said, why not let us do something like prop firm? But then the money would be fake, right? The money would be fake, right? But then they now decided, okay, so how do we make money if the money is fake? What this the initial plan was the money will be fake, but then when they pass, they'll connect them to actual hedge funds. You get, that was the idea. Some bad guys still took over again from Pakistani guys. Said no, why not let us do it in such a way that they pay you, they pay to buy the account. When they pay, that money that they use in paying will now be used to settle them. That was how what this prop firm we know now started. See, the model is crazy in such a way that it is actually dependent, in quotes, on people losing money. That is why the rules are very, very crazy. The rules at the beginning, when it was actual prop firm, was never stringent, because the exposure is the hedge fund guys will screen you, normal screening, and you trade, right? So your exposure is like maybe 1% or 2%. The money is much, it's 1% or 2%. So even if as soon as you lose money, you are out. Nobody's going to beat you, because for every hedge fund there is always an allowable fund that you can allowable amount that you can actually lose in that fund, and that is all. It closes out. So, but now, because of people they are playing on the fact that this is what people really lose money, and they created these rules and made this fit. That is why most major regulatory organizations or major governments in the world don't approve for prop firm. Right? You saw the issues that happened with which prop firm was that? What's the name of this guy? This Pakistani guy that had a prop firm in Canada that was basically arrested, and their prop firm was had to be closed down, right? Because they are surprised that those countries, US, Canada, are surprised that how can a prop firm have so much money in their account? Like, does it make sense? Because then if there's a prop firm, that means this money should be given to people to trade. But then you're having so much money than the amount of money you give, because then people are buying those accounts like crazy, and people are losing because the rules are too tight, right? So you really don't want them to succeed. It's more about them not succeeding than them actually succeeding. Because if they succeed, you're already scared. You're looking for. That's why when you pass, you start cleaning you up and down. That already defeats the concept of prop trading. That's why if someone's asking me should I do prop firm, I'll tell you, don't stress yourself. Also, all those people saying they are making money from prop firm, they're actually affiliates. They are collecting commissions from people buying accounts for prop firm. So don't fall for those things. Any endeavor that naturally is hard to succeeding, but then the players in that space now adds extra layers to make you fail. Don't do it. Basically, don't do it. It's not worth it. And the reason why a lot of people are still gambling no matter what happens is that because it is easier, right? It is easier to the chances of you making money is easier, even though gambling itself is something you can't control, right? You can't control the occurrence, but then the opportunities to make money, the flexibility is easier. Assuming gambling companies, for example, maybe the BetNigerias of this world, Sportsbet of this world, if basically the only thing they bet on is accurate scores, people will not people will not bet, because then people will bet, but then most people will not want to bet, because then you are limiting the occurrence to just one thing, correct scores. But then because there are so many things, corner kicks, throwing, away goal, so many, that is what makes it a bit easier for people to actually say, okay, I want to go, because then some of these occurrences, the chance of them happening is higher. That is why forex trading still has that opportunity also, because then as long as you follow the principles, people make money with the principles. In fact, people that you've seen grown make money with these same principles all the time. So if that success can be replicated, so I can practically copy someone's template of risk management and money management and also be successful, that means that it is something worth doing, right? So as it stands, whether it is options, forex, it's a zero sum game. For every time you place a trade, someone else is taking a brunt or enjoying the trade that you place. So it now depends on you to now say, okay, what am I going to be doing? Am I going to be playing without risk management? I'm going to be playing with risk management. Now, it now goes back to my final conversation. I think I've raised it before about the fact that about this. This is what you should. This is what you should. Somebody wondering, maybe your religion says gambling is a sin and all. These are all social constructs. We gamble every day. The word gambling is just taking a chance on something. You take a chance to be alive. Take a chance on anything. Everything is a chance. So anything that has to do with chances is gambling. Then of course, people start looking at anything that has probability is a chance. Anything that has a chance is gambling, right? So, but then people would say, no, it is not a good word and all that. But then I'm not a religious person, right? So I don't allow all those religious conversation get to me. The whole idea is everybody wants to make money. In fact, everything that's happening. Can you guys hear me?
Yes. Hold on,
Yes,
bro.
I can hear you.
So now, if there's anything you need to understand, and that is why we emphasize a lot about risk management. Why? Because there is skill, no matter how skillful you are, right? No matter how skillful you are, if you don't understand risk management, you practically lose a lot of things. And it's basic facts, right? No matter how skillful a pilot is, taking 1,000 hours of flight travel, he or she cannot sleep while is it driving the plane or piloting the plane. Why? Because it is against the rules. There are certain rules. Every endeavor has certain rules of engagement, right? It is only in this space someone will say, because I place a trade, it must be successful. It is a very wrong thought process. It's an extremely wrong thought process, and that is what we've been trying our best to actually correct in this group, right? That I'm not. There's actually an amount that anybody can make now. Say, wow, I'll feel it's not possible. I've been doing this for a while, right? And I've seen a lot of things, so I don't really get excited, or it's just poker faced, because for every time you place a trade, you should not have this expectation that it must be successful. No, have an expectation that it can fail, right? But then, how do I react to it? That is where your proper risk management comes in, and that is the difference between two people in a casino. And that's what I was talking about earlier. See, if there's anything you should aim for in life, is that try to be a casino. Try build yourself to a point where you are the casino, right? But if you won't get to a casino, be a whale. A whale is an experienced professional gambler, someone that see the difference. Primary goal, profit, long-term ROI. Compulsive gambler, you thrill or escape, right? Method, skill, strategy, math. Luck, chance-based. Risk management, high. Strict bankroll management. This one, low, chasing losses. Psychology, rational, detached from outcome. income source, consistent calculated revenue. This one, unstable. Psychology, emotional, obsessive, impulsive. Income source, consistent calculated revenue. Blah, blah, blah. Unstable, often leads to death. Mental health, generally within normative range. Mental health, high psychological distress. Does this not sound like trading? Guys, does it not sound like what we do in what we do in trading? This is extremely similar, right? This is extremely similar. Extremely similar. And this is why we take time to talk about this, because no matter how much AI I give you, as long as the AI cannot is not the end, it's just a means to an end. Oh, what's happening in my internet? Can you guys hear me?
Yes, I can hear you.
Yes, you're audible.
You know that noise you get when Telegram is trying to reconnect. I'll just try and end the session. So basically, I'll just try and we'll probably do a part 2 of this conversation maybe sometime in the future. So, but this is the concept, and that is what I'm saying. If you cannot be a casino, right, be a whale. A whale is someone that goes in there and doesn't throw away his money, plans every bit of his approach. Now, will a whale not lose money sometimes? Yes. If you lose $100 to gain $1,000 or $2,000 at the end of the day, it's business. That's why they are focused on profits and long-term ROI. Long-term. I don't know how you guys do it, but then I've never planned every trade on, for example, on Nike options. I'm planning for 1 day or 2 days or 1 week. I plan for a month. I've not showed you guys my account in recent time, but this is where I am now. A lot of us here probably saw when I was on 30K for this account, right? I'm not even traded a lot this month, but I achieved my target for last month at 90K. I achieved my target for last month at 90K. Here's my password. So the whole idea is simple. Don't go in there. Of course, we all took time to get to that point. I also had times whereby I also lost money in doing this, right? But I just sat down one day and I made up my mind. Like, okay, guy, what does this industry look like, and what is my long-term plan of playing in this industry? That's basically what I told myself. I asked myself, and I made up my mind. This was how I'm going to play. So in the future, I'm still going to be a casino, not just a whale. I'm going to be a casino. Internet is messing up. Can you guys even hear me? I don't know if I'm.
Yes, the audio is good.
The plan is that I'm still definitely going to be a casino, not just a whale, right? But then, while I'm at the whale level, I'm going to get as much funds from the market as possible, right? The market as it stands, and I think that's one thing that you need to correct. There's this feeling that I know they're against me. No, they are not against you. They don't need to be against you. The data is against you in itself, because they know that you'll be emotional. They know that you'll be obsessive. They know you'll be impulsive. Because I've worked a lot of brokers, right? I've seen it back end. I'll just sit down. Like, people, you just sit down on a Friday. By Monday, people have lost funds. Like, it is normal. Like, people just, that's how they are, right? So, because that the odds is stacked against you, it is not, they don't have to touch anything. I've seen a lot of people say IQ options will manipulate market. Do you know that for their OTC, for example, they don't need to touch anything? It's an algorithm. You know how many traders they have? Sometimes based on the information I have, sometimes they go as far as having over 5 million people trading at the same time. No, there is no single company that can sit down and put 5 million people on a system to be looking at your own trade and to cancel your own trade out. No, it's an algorithm. The algorithm just runs based on normal preset conditions. Nothing. Because it knows that people will definitely make decisions, wrong decisions. They know. They don't even have to touch anything. And this is what the river has not made money. They've made over 30-40 billion dollars just from people's trading, because those volatility index, boom and crash, all those things are just an algorithm they created. I was researching that year about boom and crash, and I saw that what they basically did was they created an algorithm that mirrored an existing instrument from maybe like 95, 96, 97. I don't know what instrument it is. I didn't get the entire real instrument. I saw the book. I just read it. I just laughed. So that's when I understood, whatever you're saying, boom and crash do, is because it's just copying something, a certain chart is what it's copying. Right? So you can imagine how people now constantly now go there. This stack trade risks so much. You get, because they want to triple, quadruple, make 100% in 2 hours, 500% in 6 hours, and all. And do that. So they understand people will definitely, the minute, the day people make more money than losses, right? The model of brokerage will change again. Not like, of course, some brokers will definitely collapse, but the model will change again, and people will find different ways to continue doing business. You get. But for now, we are the ones giving them money. We are the ones making them money. And if you want to also make money off them, which you are allowed to, because there's no emotions in the finance space, right? You need to understand and sit down with yourself and say, okay, guy, how do I cash out from these guys? Because they will pay you. You know why they will pay you? A lot of people are losing money like you, right? So they will definitely pay you. So why are you then taking it as if, no, if this $100 doesn't turn to 1 million, I will not stop? No, calm down. Target a year, $400, and say, okay, Alpha, I want to be able to make $20,000 in 1 year from trading, right? And break it down. What do I need to make per month? Okay, if I know what I want to make per month, what then do I make per week, right? So weekly, this is my target. I've also noticed some of us are also over trading. Some people from you think that you are trading over 40, 50 times a day. You don't have to. You burn out. It's not. You get max. Anybody should really trade per day. 12, 13, 14 trades. You are good. If over trading will lead to you being emotional, and emotions is what they need. They need you to be emotional. That is why they are banking on your emotions. To play a trick on you and you lose money. So, like I said, when I was talking about it yesterday, that two things will happen. Some people will actually listen to this session and are like, oh, I'm not going to do this business again. Some people say, no, I must do this business, right? So if you're that category of saying I want to do business again, I will tell you something. I started from stocks, right? From stocks, right? Now tell me one wealthy person in the world right now that is not benefiting from the financial market, one way or the other. One. It's not possible, because you know why? The financial markets, they will buy bonds there, invest in bonds, right? Even if you say, no, I'm not investing in forex, but I'm investing in real estate. Real estate companies also get loans from banks, and some of them even get to public companies that banks would invest in them. Pension fund invest in them. Pension fund that invest in them also need returns from them. So there is no way, mathematical sense, that you would be in this world and you would not need the financial market to grow your funds. Dangote is the richest black man in Africa because he is raising funds from the markets. You can sell 100, you can be selling chin, right? And to 1 billion people, right? But you can never scale that chin unless you are in the market. Go and check Amazon, go and check Facebook. These people all scaled up wealth because of the market. So this is what the market does for you. Market you can bring 1 million to 1 billion to the market, and if you are smart about it, market can move that 1 billion to 10 billion in less than 5 years. You've seen it now. I showed you what Elon Musk did, right? So if you are in that category of people that want to actually create wealth, right, you need the financial market to create wealth, and that is basically what it is. Because if you don't use financial market to your advantage, they will use you in the financial market. How do I mean? You use Facebook. Facebook sells with your data to advertisers. What else? You use you buy food. You try to build with cement. Dangote is in the stock market with that same company. So for every time you buy a cement, you are adding to someone's net worth that is going to the market to get more, right? So either you are a product or you're actually selling something, and that is why I think I thought about it yesterday on our spaces, right? So it is a decision you make, right? That this financial market also, I want to also be a major player. I want to build wealth here, and if you're going to be building wealth in the market, you need to be smart. You need to know how the market players play. There is no limit to how much you can make, but then there is a way there's a manner to people operate in this market, and that is what you should take time, right, to understand, and you'll be good. So I don't know if anybody has questions. We'll have more of these conversations from time to time. It's not every time we will do live trading, but sometimes we also have to tell ourselves the basic facts of how the market works and how we can all be profitable in it. Yay! Mubarak is asking if I recorded the session. I didn't record though. Joseph, you didn't tell me on time. I didn't record it though. Do you have any questions, guys?
I did. I recorded it.
Okay, you recorded it. Oh, fantastic. Oh, nice one. Thanks. Okay. So, any question, guys? Or any additions? Or is there anybody that works and that says, this guy just lied here. Yeah, come on, prove that lie you just told here. You have anybody like that? Okay. If there's no questions. Okay. So, Mr. Junior, go ahead, sir. Go ahead.
Good evening.
Good evening, sir.
I think from all you have said, it still boils down to risk management.
Yes.
Or money management.
Yes.
Because over time,
yeah.
If anybody tells you that Dangote doesn't make profit, the person will be lying to himself.
Mm-hmm.
But do you throw in all you have capital? No. Let it be that there's something to always with. It's over time you build up that long-term thing.
Yes.
And for me, like I keep saying, anybody that looks at the financial market or trading as a short-term thing is only deceiving himself.
True.
Because if you are trading to make money, run and go and buy a car tomorrow morning, the account is empty. I think you will price seriously and you suspect that somebody is doing something special. Yes, the AI is good. With the little I have tried.
Yeah.
But I still would say that if you are not careful, I'm still making some of these statements based on what comments I've seen people made in the group. If you're not careful, You will be rich today and very poor tomorrow morning.
Exactly.
You borrow again and
exactly.
You will be rich suddenly again and broke again. I think that's a gambling thing.
Yes.
For instance, if you have $1,000 and, like you rightly said, you risk 10% on every position. You trade up, it moves up, it drops a little, it moves up.
Yeah.
You now tell yourself, okay, at the end of the month, you will assess yourself.
Yeah.
It's okay. At the end of the month, I've been able to make 10% of my capital, 40% of my capital, or 100%.
Oh, yeah, exactly.
You now say, okay, inside this money, let me go home with 10% and enjoy with my family. Let the rest remain in the account so that you continue to, juggle that money. I know that before 6 months' time, there's no way that your account will cry or bleed, except you're not fully those.
Exactly.
It also boils down to the fact that, sorry to say, but the truth has to be said. Anybody who is going trading with $10, I think you're not ready. That's the truth. But for the sake of, having experience with the AI, and how the system works, it's okay. Or being sure that somebody is not looking at you about maybe the AI or the broker IQ option. But for you to trade properly, like you said, based on your own assessment, for every position you need to take, you're risking 10% on the account. So for you to waste that account completely, that means you would have lost 10 consecutive signals of 4 I think it's 4 level stages of matching your knowledge. 3.
Yes.
Which is not possible to lose sometimes.
Which is exactly.
Fair enough. If that month does not end well, okay, but you still have something to keep on, going and all that. But I can assure you, from the little I have seen, that there's no way you will stay 6 months and you'll not be able to post, okay, this is a profit I have made.
Yeah.
There is no bank that will give you 20% profit in a month.
It's not possible.
In fact, I'm not sure of any fixed deposit that will give you even 20% in a year. I'm not sure. Except somebody
it's even it's not, it's some of them, but it's not even fixed deposit. It's those mutual funds. They won't give you 20% in a year.
Yes. Maybe this thing, Stanbic IBTC.
Exactly. So
but if you can dedicate yourself.
Okay. Is it me that is struggling? The network is just. But is that how I've been sounding too? I don't know if that's how I've been sounding too. Network is just going up and down. I think that what Mr. John basically said is just a perfect summary to what I've been talking about, right? And I really sometimes I wish that I can just insert my risk management knowledge, right, to everybody, right, so everybody can be making money at the same level, right? Because it's something that it took me time, and that's what I think I said it before, maybe last year. I said I was talking to him. I said it's not possible. Okay. So no, it was you. We're not hearing you again. Yes, we're not hearing you again. Go ahead, sir.
I made my input.
Oh, okay. So I was talking. I said I can't blow a trading account, and the guy was like, "How?" Because then it's not possible, right? Because the understanding over the years have made me realize that every of my trade, I'm assumed that trade is gone until I make profit. So there is no emotions to it. I can't wake up and start doing revenge trading. I can't do revenge trading because I'm not I'm not. Event trading comes from the fact that you are angry, you made losses, and you feel the market is unjust to you, and you want to revenge. And that is basically what event trading does. A lot of people do event trading. You lost 10 trades, and you want to quickly revenge and quickly come back. You get. And that was why we did that competition earlier. The last competition we did last month, to give an idea to everybody that, okay, this is how much you can, this is how possible you can grow an account. But if you check other competitions on your IQ options platform, you see people grow $100 to thousands, 12,000, 15,000, 20,000. Right? It is like, so that's the potential. But then, how then do you become so skilled that you're able to grow? Because the growing is the problem, not the trading and profitability. No, it is the growing, right? Because the growing requires skill, right? Nobody grows by chance. You need to feed yourself a certain level of knowledge and certain level of skill to be able to get. So now that you now have the AI, right? You have the AI, right? The AI obviously makes analysis, gives you all the analysis, gives you less time to stress in terms of where is market going, where is market not going, right? The only thing you need to do is, okay, how do I function properly within this analysis of within this analysis? How do I function properly? How do I make the right decision per time? Because there are about three process to trading, right? You analyze, you decide what you want to risk, and you manage your trade. Which is money management. The analysis is being done by the AI. That's off the table. So the only thing in your own coffers, the only thing that you have to do is your risk management and your money management, right? So risk management before you place the trade, money management, how to manage the entire account, right? Okay, go ahead, Mr. Tom. You have a question. Go ahead.
Okay. Good evening, sir.
Good evening,
and thank you for this section. Seriously, as I said earlier on, so when we're talking about it's mind shifting. I only have one small question, and that's that
Okay.
on OTC.
Yes.
Do fundamentals affect OTC trading?
I didn't get that.
Does
fundamental affect OTC?
Fundamental, yes.
Yeah, it does. It does on a Monday to Friday, but Saturday and Sunday, no. Do you get?
Okay.
So Saturday and Sunday are those. It's just like this Saturday and Sunday is more like an informal setup. You get. So if that's why you notice that on Mondays, it now tries to how do I use the word? It tries to balance up with current prices. Yes.
Okay. Thank you, sir.
Yeah. Any other question, guys?
Okay. Still on that question.
Yes.
The AI.
Yes.
Now, do the AI help us analyze the fundamental part of the market? Do you get it? Can you hear me? Can you hear me? Hello?
Hello.
It's like network is bad as you said.
Oh. So let's wait for him.
Manu is calling me.
Okay, you're back. Can you hear me now?
Hello, guys. Sorry, guys. Can you hear me now?
Yes, I can hear you.
As in, the network has been shitty here, guys. I don't know. Okay, yeah,
So,
go ahead with your question.
yes. So I was saying that the AI help us analyze the market fundamentally, like the fundamental part of the market. So the AI help
Yes.
us analyze that.
Yeah. And so, okay, you are asking if it does that. Okay, so this is the thing. Remember that fundamental will just shift direction or maintain direction, right? So because we've not gotten to that point whereby we can actually totally what's the word, integrate fundamental decisions. Fundamental decisions drive sentiment, right? So the AI basically can get sentiment from the market where people are trying buying. That one is a public knowledge. You can get sentiment analysis online, right? So, but then because fundamental is more than data. Do you get my point? So fundamental is two types. There's data-driven fundamentals and there's opinion-based fundamentals. So if for example, Donald Trump says they're going to be bombing Iran next week, that would drive oil prices, right? But then there's also data that comes from NFP, labor data, CPI, inflation. Those ones are data-driven, right? So the way markets react to want to bomb Iran is unpredictable. You don't know what markets will say. It's not complete. You can't be completely shocked. You can only have an idea that it's possible that markets would get crude oil might grow. Crude oil might also not desire to go. People might not desire to price crude oil high. Might just chill. So those part of fundamentals is very, very hard. It takes time. It take maybe 10 years before we get to that point whereby we can have AI that can do that. But data-based fundamentals always does two things: either it leaves the market the way it is, or improve or changes direction, like complete structure, right? So those ones have been factored into the AI. That some certain indicators of direction change. That's why it is just 5 minutes. There are about 12 candles in a 1 hour period, right? So that means that within that 12 5-minute candles, you would have seen a change of structure, right? So that's why even if your first trade doesn't catch it, your martingale level are there to help you catch any of those moves. Do you get what I'm saying? So that is the whole idea. So that is like four entry times you get of a particular direction. So if you're seeing AUD, NZD, OTC call, for example, and the first one the AI sees a pattern before it gives the signal, and it doesn't follow. It believes that if it does it in the next 3-4 candles, it should be able to. Hello, guys. Can you hear me?
Yeah, you're back now.
Okay, very good. Okay. So now, it's just a call that came in. So give me like I probably want to end this in like maybe 1 minute. I have to pick up something. So so basically that's the concept, right? So it is all based on the patterns, and no matter what happens, if market wants to change direction, it gives certain cues. Do you get? So those cues are what has been configured already. You get the conversation now. So so that's why you see sometimes the AI will give two signals, same pair, different signals. Do you get my point? Because sometimes the move might have happened. I think you witnessed it before now that I gave a signal on the live call. You also picked a different signal. Yeah. So that particular thing is what it does. So the whole idea is a function of probability. That there's high probability means that if you check across a range of signals, you definitely you should be winning more than you're losing. That's the concept, right? So even when you have times the market is quite choppy, what I do is that, and I think I've even said it before here, that I open multiple tabs and scan the AI on multiple tabs, right? It will definitely give you different. So no matter how bad it is, you really might not necessarily have a day whereby a full day you have all losses. No, you have probably a 4-hour period where, because if market doesn't trend, you might not necessarily have very good entries. So no matter how bad it is in a full 24-hour candle, you will still see 1 or 2 1-hour candles that will trend a bit. So you will still see those opportunities in between. Yeah.
Thank you, sir.
Any other question, guys? Okay, so if there's no question, guys, it was an awesome session. Thank you guys for coming. I think it's recorded. So Joseph, please help us post the recordings on the community, so everybody can actually still go listen through and enjoy 1 or 2 things from whatever was discussed. Thank you, guys. Thank you, Mr. John, for your contribution. It was timely and it made a lot of sense, and I hope we can all emulate it. So, guys, my conclusion is simple. If you're not going to be, if your end game for this financial market conversation should be either you own the casino or you become a whale. If you're not going to own a casino, at least be a whale. So that's just it, guys. Okay, guys, catch you guys. I will resume live trading from next week unfailingly. I've been pushing it. Work has been crazy, but then we'll resume from next week. I'll relieve Joseph a bit so that we can focus more on the onboarding community, right? So we'll shortly we'll mix it up so that the spice can be perfect, right? So thank you guys, and I'll catch you guys later.